Hey everyone, welcome back to Corporate Decoder, the place where we unpack the confusing language of business to find the real juicy bits. We're diving into an 8K filing today. You might think an 8K is just a quick update, but sometimes that quick update hides some really interesting stuff about a company's leadership. This filing from Jet.AI Incorporated could tell us a lot about who is steering the ship and how they're being compensated. Let's see what is really going on behind the scenes with their executive team. Before we get into the nitty-gritty, if you are enjoying these deep dives into corporate filings, make sure you are subscribed. And hey, we've got a link to our Discord community in the description below if you want to chat more about these companies. Alright, so what we have here is a Form 8 from Jet.AI Incorporated, a company that primarily deals with aviation. This is a current report that companies file when they have significant events to announce that shareholders should know about right away. Think of it as a company's press release, but filed with the official government body that oversees publicly traded companies. The main story here is all about executive employment agreements, essentially Jet.AI Inc. has entered into new and updated employment contracts with two key people. Michael Winston, who is their executive chairman and interim chief executive officer, and George Murnane, who is the interim chief financial officer. These new agreements start at the very end of 2025 and are set to run for 3 years until the end of 2028. But here is the kicker after that initial term. These contracts will automatically renew for another year every year, unless either the executive or the company decides to end it by giving notice 90 days before the renewal date. This is pretty standard stuff for executive contracts, giving both sides some certainty. Now let's talk about the money. Starting the 1st of January of 2026, Michael Winston will be earning a base salary of $425,000 per year. George Murnane also gets a bump. His starting salary will be $300,000 annually. The company's board of directors has the power to increase these salaries, but not decrease them. And here is where it gets interesting. Every year, starting the 1st of January, their salaries will automatically go up by at least the amount that inflation has increased in the past year, measured by the Consumer Price Index for urban consumers. On top of that, both executives can also get additional salary increases based on how well they perform. But that is entirely up to the board's judgment. This part is a big deal for potential investors. If Jet.AI completes financing deals or other strategic moves that push the company's total value, its market capitalization up to at least $250 million, then Winston's salary will jump to $550,000 and Murnane's will go up to $425,000. That is a significant increase, directly tied to the company's growth and valuation. What is even more interesting is what happens if the market cap hits between $100 million and $250 million. In that case, their salaries will be adjusted on a prorated basis, meaning they'll get a portion of that big increase based on how close they get to the $250 million mark. This really incentivizes the executives to focus on increasing the company's value. Beyond their base salaries, both Winston and Murnane are eligible for an annual cash bonus. The target for this bonus is a full 100% of their salary. However, this bonus is not guaranteed. It depends on the executives continuously doing their jobs well, and on both the executives and the company hitting certain performance targets set by the board or its compensation committee. The board or committee will ultimately decide how much of the bonus, if any, is actually paid out. They could get the full target amount less or even more. And here is another interesting detail. Up to 40% of any bonus earned could be paid out in company stock that immediately becomes theirs to keep. This is a common way to align executive interest with shareholders. They get rewarded with stock, not just cash. On top of bonuses and salaries, both executives will also be able to participate in any stock plans the company might have. This includes things like stock options or restricted stock awards, which are basically shares of the company given to them. They'll get the same benefits as other top executives. More importantly, if the company goes through a change of control, which means it gets bought or merges with another company, any stock awards or options that they haven't fully earned yet will immediately become fully theirs. This is a pretty common safety net for top executives. And speaking of change of control, there is a special cash bonus mentioned. If the company goes through a change of control that happens because of the proposed deals with Fly Exclusive Incorporated, both Winston and Murnane will get a special cash bonus of $1.5 million each. This is a pretty substantial amount and clearly shows how important these executives are to the company, especially during significant transition periods. Now let's look at what happens if things don't go so smoothly. If either Mr. Winston or Mr. Murnane is fired without a valid reason, or if they decide to quit for a good reason, they are entitled to some pretty generous severance. First, they get paid for any salary they've already earned but haven't been paid yet. Then they'll receive a lump sum payment, which is equal to their salary for the next 3 years after they leave. That is their salary for the entire 3-year period. So just to be clear on that third year of salary, they're getting it all paid out in a single go. On top of that, they'll also get a one-time lump sum payment for each year of that 3-year severance period. And this payment will be equal to the target bonus amount, assuming they would have fully achieved all their performance goals. This means they're essentially getting paid as if they still work there and hit all their targets. They will also continue to receive their health insurance and other benefits for that same 3-year severance period. The company will cover these costs. And finally, any company stock or stock options they received that weren't fully vested yet will become fully vested and theirs to keep the moment they leave under these conditions. That is a pretty comprehensive severance package. It shows the company is trying to protect its executives, even if they part ways under circumstances that are not their fault. So that is the summary of these new employment agreements. If you want to get into all the super technical legal details, you can check out Exhibits 10.1 and 10.2 of this filing. Now, looking at the big picture for Jet.AI Incorporated as of the end of 2025 and heading into 2026. These executive compensation agreements show a strong focus on retaining key leadership and aligning their pay with the company's success, especially in terms of market capitalization and potential growth. The significant severance packages suggest the company recognizes the value of its current leadership and wants to secure their commitment, even offering substantial financial protection if they leave under certain conditions. The bonuses tied to performance and the potential for stock awards are clear signals that the company wants its executives to drive shareholder value. The explicit mention of a special bonus linked to a change of control with FlyExclusive Incorporated and the corresponding payout to the executives hints at a major strategic move that the company is either actively pursuing or has already agreed in principle to. This could be a significant event for Jet.AI in the near future. While the filing doesn't give us direct financial numbers like revenue or profit, it clearly signals the company's strategic direction and its commitment to its top brass. The robust compensation structure, particularly the link to market capitalization and the generous severance, suggests management confidence in future growth and valuation increases. The main risk here is that the company might be offering very high compensation and severance packages, which could be a drag on profitability if the company doesn't perform as expected or if these strategic moves don't pan out. However, on the flip side, these incentives are designed to push the executives to achieve those very goals. In conclusion, Jet.AI Inc. is clearly investing heavily in its leadership team, tying their compensation directly to the company's market valuation and strategic goals. The proposed change of control with FlyExclusive Incorporated seems like a significant event on the horizon. Alright, that is our breakdown of Jet.AI's latest filing. What is your take on these executive compensation packages and what they might signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.